It is the tax filing season, and if you haven't filed your taxes, now is the time for you to do so, because the deadline is till July 31st, which is the end of this month. But if you have filed it and you have made a mistake in your return, you might get a notice under the Income Tax Act of 1961 and your return will be declared defective. But you don't need to be scared or panic in this situation. Hello and welcome, I am Pallavi Sharma and you are watching Money Wise with ET Now. Say you filed your ITR and you made a spelling error in your name or maybe in your address or something else. Now your return will be declared defective. In this video today, we tell you everything about a defective return and how you can correct it. Let's begin. Your ITR can be declared defective due to various reasons like using the wrong form, miscalculating income and much more. You might have mistakenly entered wrong challan number while filing your ITR, or you might have paid advance tax for the wrong assessment year, or maybe your employer filed the wrong TDS. As a result, your Form 26AS, your AIS, TIS auto-populated the wrong information. It could also happen that the bank deducted the TDS amount and put a wrong entry in their TDS returns. There could be numerous other reasons. The best way is to avoid these by checking your challans properly and matching it with your bank statements with the TDS information in your AIS. If something is incorrect in your AIS, you must request the Income Tax Department to correct it. Mismatch in income and TDS reported in return with details reflected in Form 26AS is another common reason. Your return will be defective if the credit for TDS has been claimed but the corresponding income was omitted to be offered for taxation. Second, if gross total income and all heads of income are entered as nil but tax liability has been computed and tax has been paid. Third, if the name of the taxpayer in ITR is not matched with the name as per PAN. For example, crypto exchanges deduct TDS on every sell transaction. But for some reason, you neither declared this VDA crypto income or filed the scheduled VDA while filing your returns, then it becomes defective. Same can be with TDS on dividend payments. Say if you have a business income, you must file your income tax audit report by September this year. But if you have not done that, it will be tagged as a defective return. In case you have made a partial payment of tax against the net tax liability or tax payment amount that differs from what is shown in the tax payable in return, then it is also defective return. Now, what can you do to correct it? You can either file a fresh income tax return or a revised return in case the time has not lapsed to do so for the assessment year. If there is no change in your gross total income or deduction claimed, ITR filed as a response to the defective notice will be considered as the fresh ITR and would replace the defective return. In case there is change in gross total income or deduction claimed, you will have to file a revised ITR. For this, you will have to go to the e-filing portal, log into it. In e-file menu, select Income Tax Return link. Select the assessment year, ITR form number, filing type as revised return and select Prepare and Submit online in submission mode. In the General Information tab, choose Revised Return under section 139(5) in the Return Filing section, and in Return Filing type, select Revised. Enter the acknowledgement number and date of filing of original return. For FY23, the deadline to file revised return is December 2023. You need to file a fresh or revised return within 15 days from the date of receiving the notice. However, the assessment officer or AO can give an extension. If the response is not given, the ITR will be treated invalid. So make sure that you file your ITR right. If you are new to this, watch our earlier videos on how to file your returns and follow ET Now for more such videos.
If you like this video, then like, share and subscribe to ET Now.